Good morning, stock and options traders. Steve Gans here, and welcome to the weekend update. I'm going to ask you a favor right up front here, if you would. If you like this content, if you find this to be useful, please make sure you like and subscribe. That tells us that this content is of value to you, and hopefully will help other people find it as well. So, with that, here we are, January 26th. And I'm going to just dive into the weekend update. Now, as you recall, last weekend here, let me go over to get my pencil. We were right in this general area. See if I, there we go. Right in that general area. And I told you it was kind of 50-50 that if we did not break out to, above this old high, then we were going to be possibly in a downtrending channel. So I said it was going to be critical on the week to see if we could poke our heads above this high and ideally get above this support and resistance. Well, by the end of the day on Tuesday, that had happened. We not only rallied up, but we even had a gap right in here. So a gap higher. And then we moved up and broke out to all new highs. And then the very next day, we sold back off a little bit on Friday, but not a lot. We didn't come below that bar. So to me, that's still pretty darn bullish. The other thing we can look at here is our up days. Our volume was much higher than it was on our down day. If we take a look at our down day on Friday, volume was significantly lower. Now, volume is often a little bit lower on Fridays, but when you have lower volume on what's a little bit of a down day, that of course is less overall concerning. So right now I am still in bullish mode. It seems as though this possibility of a new channel forming to the downside has gone away. The few earnings that have come out right now appear to be very solid earnings. So to me, that's looking like, we're either going to chop sideways here or potentially reach back to the top of our channel. So that's what I personally am looking at in the S&P now. Now, a couple of other points to look at here, just kind of see if other things support this thesis. Let's look at the volatility index, the VIX, and see if there's lots of people potentially buying insurance on their positions, meaning that there's people out there that are fearful of the market right now. Well, the answer to that is a big fat no. Right now, volatility is quite low. It's not as low as it has been, but overall, pretty darn low reading on the VIX. So that tells me that, people don't really have a fear. There's not a lot of people out there looking to buy insurance on their positions right now. Another index I always look at is the Russell 2000, the RUT Small Cap Index. And I mentioned last week as well that on the rut, similar story here. We needed to kind of break out above this prior resistance. Now, the breakout here wasn't quite as resounding as it was in the SPX. And we are still in, what could be deemed a little bit of a resistance area here. But we're still back, what I would say, solidly in the channel. And my expectations for rut might be a chop sideways or maybe even a move up, maybe to the center line on this channel, because that seems to be an area in the past that has been a little bit of resistance. But at the end of the day, we're pretty solidly in this channel, which again, I consider to be a big plus if you're a bull. Now let's look at the volatility on RUT, the RVX, and see if that kind of tells the same story to us. And as you can see, it does. So volatility here is pretty much as low as it's been in the past year, or at least the past few months. It had been a little bit lower here back last summer, but overall volatility on RUT is also quite low right now. Again, pretty much a bullish sentiment saying that there's not much fear in the market. So overall, right now, from my perspective, the technical indicators are still in bull mode and our channels are still intact. So that wraps up the market summary for this weekend of January 26th. Now, those of you that are part of the alert service, I want to or have an interest in being part of the alert service. I'll put a link down below to tell you a little more about what that's all about. But the alert service is basically a service where I share trades, specifically options trades, that I am personally making, but I share them in a size much smaller than the size that I make them in for learning purposes. And again, I'll put a link down below to the alert service. It's quite affordable. Anyone that's interested in wanting to learn to trade options for income, it's a great way to start because every time I put on a trade, I put out a detailed video that explains why I'm doing the trade I'm doing. I explain the logic behind it, what my expectations are of the market at that point. And one of my favorite trades that I often do is a butterfly trade. And the trades right now, this trade is a butterfly trade. It's doing nicely. The nice thing about butterfly trades, as the market moves a lot up and down, butterflies aren't impacted very much. So it's a much safer, I would say, trade. Of course, any trading involves risk, but this line right here is what's called a T0 line, this kind of arced line here. And the key to that is it's relatively flat. That shows the P&L in our trade. So this market can swing, from 6,300 down to 5,700. That's 400 S&P points. And our P&L is not going to be impacted very much. So what am I trading here? Where's my profit come in? Well, the nice thing about butterflies and options is as they decay, this line arches up to where profitability comes into this trade. So I'm really just trading time decay. I've sold something of value, not unlike an insurance salesperson. So I've sold insurance, and now I'm sitting around as a trader hoping that nobody has a claim against me. Now I'm in Southern California. There's lots of claims happening here right now. And that can also happen in the market if there's a big tanking in the market. But insurance companies long term are profitable because they know how to price their product. And that's what a good options trader does. They know how to price their product, they know when to sell certain products. And that's basically what these butterflies are. There are certain opportune times to get into these trades to where you have a really good reward to risk ratio. So right now, our butterfly trades, this one is nicely profitable. This one's nicely profitable. This one we just entered. While it shows it's down a little bit, it's probably not quite down that much, but it will be down slightly. And that's because of the run up in the market. This trade was set up by design to be slightly bearish in nature because the expectation last week when this was set up was that we are at an all-time high and we might pull back a little bit in the market. So if the market did in fact pull back a little bit, this trade would have generated a little more profitability. So this is a trade, if our market continues higher this week, I'll need to adjust this trade and reconfigure it slightly. I do a complete video for that as well. It's about 3 to 5 minutes that shows what I'm doing, how I'm doing it, why I'm doing it, so that traders can learn from seeing how I'm handling the position. This particular position here is a long-term, what's called a leap. It's kind of a buying into a stock. In this case, the stock had been called SQ up until last week when its symbol changed to XYZ. As a teacher, I always use, let's say we buy stock XYZ, because there was never an XYZ. Now there's an XYZ. I have to rethink that strategy. But anyhow, this is a long-term position. It's basically a stock replacement. I could have bought the stock, but I would have spent a lot more money and had a lot more risk. I chose to essentially take a position in that stock by buying what's called a leap, a long-term call. The nice thing about that is I get pretty much the most of the upside that I get if I own the stock, but I have capped my risk in this trade by using an option, because when I bought that leap, the maximum amount I could lose is the amount I spent on that option. So that's a strategy that we do from time to time. Then this final one is selling puts. So this is a stock symbol, FTNT, that I decided almost a year ago that I would like to own. I've been selling puts on this every month. I haven't been assigned yet. Each month, I roll my puts out in time. I collect some more premium. And at some point, I'm thinking FTNT is going to pull back and I will end up getting the stock put to me. But at the time that happens, I will have lowered my cost basis because every step of the way I've been selling premium, I've been selling insurance that ends up being very valuable for lowering the cost of that stock when it ultimately gets assigned to me. And I've got a very detailed video on that as well that's, I don't know, probably 30 minutes long or so explaining the wheel process. So those are the current trades that I'm in the alert service. We're heading into the meat of earnings season. While I don't like to trade fast, short-term types of positions in this service, this is designed mainly for people that are looking to trade long-term positions, aren't wanting to day trade, aren't going to sit at their computer all day, every day, deciding, do I get in, do I get out? I've been there, I've done that. I did it for about 3 years. Great returns, but man, that's a level of stress I don't want in my life at this stage. So these tend to be longer term, slower trading positions that you can check in on once a day, things along those lines. But when we get into earnings season, occasionally I will toss an earnings trade or two in here. Same process. I do a detailed video showing what I'm going to trade, why I'm going to trade it. I send a copy of my order as part of that video so people can see what it is, what my order looks like. And then I talk about how I'm going to manage it, if it goes up, if it goes down, etc. But the morning the market opens after earnings, many times you do need to pay pretty close attention within that first hour of the market because depending on the moves that get made and whether the stock gaps up, gaps down, etc., I very well may end up putting in an adjustment, and that can be a time-sensitive thing. So for people that do want to see how to do earnings trades, I do them from time to time, but again, they're not designed to be the meat and potatoes, if you will, of this service. This service focuses on longer term, slower trading with less volatility. So if that sounds interesting to you, be sure to check out the link below. Thanks so much, everyone. Appreciate it. Please, again, like, subscribe. Feel free to give me any questions or comments below as well. And I do review all those and I will respond back to people. So thank you so much. Take care.